Well, guys, it is getting real in the field. And, well, the Fed is at it again. We can expect more pain in the financial markets going forward. But at the same time, the Fed, they're presenting a ton of different financial opportunities for investors, for entrepreneurs, and even side hustlers in the coming months. Now, these are opportunities that low income and middle income families can absolutely take advantage of, but very few know about. Now, the Fed has created an enormous amount of wealth for millions of Americans in the past couple of months. Not just the likes of Jeff Bezos, Mark Zuckerberg, and Warren Buffett. Not just those guys, but regular people like me and you. However, if you're among the many who have been living paycheck to paycheck, and you've been saddled with loads of debt from credit cards to car loans, very little assets, maybe even no assets, and were not positioned to be able to work remotely and did not have multiple streams of income in place, you may have found the last 2 to 3 years to be painful, to say the least. Labor, materials, and even food shortages have plagued the United States for a good 18 months. The supply chain was nearly decimated. Millions had lost their jobs overnight, and millions more are reported to be laid off in the coming months. Yes, you're right, guys. It is not over. And if it's not evident that creating multiple streams of income is as important as the air that we breathe, then I don't know what is. Now, as the economy shifts and as we navigate each of the Fed's decision, housing prices, the stock market, and other assets will absolutely follow suit. Now, thanks to the Fed's interest rate hikes, record home prices and record home sales volume has declined. And these declines have been seen on, most of the very popular real estate platforms like Redfin, Zillow, Realtor.com, House. I mean, you name it. Now, another limiting factor in housing sales besides interest rates and the housing prices, we're going to see this for many people. So let's think about these factors, right? Beyond interest rates, another limiting factor in the home sales are the housing prices themselves. Now, for many people, houses, they're not just affordable, especially given the current interest rate environment. Housing prices have also impacted the affordability of houses, right? So it's not just the interest rates. So given the huge increase in housing prices over the last 2 years, there's been a good chance that the current housing prices are in a bubble at this time. And these housing prices, this housing bubble would more than likely be coming down significantly, especially if there is a recession and continued interest rate hikes coming from the Federal Reserve. Now, we've heard from Fed Chair Jerome Powell at Jackson Hole and numerous other places where he has ultimately spoken from. He's indicated that additional Fed interest rate hikes will be coming down the pipeline. But there's always the segment of the population that will not be affected too much, right? And, let's just say that I'm in the market to buy a retirement home, for example, right? So interest rates, they would have no bearing, no impact on my decision if I have the resources to purchase a home in cash and I don't need to acquire a mortgage loan. So I've been hearing more and more people who are waiting on the sidelines with cash to buy homes once the housing prices drop. A lot of people are waiting for this housing market crash. And the more people who are waiting on the sidelines to buy up real estate and purchase real estate when housing prices crash, if the housing prices crash, if the housing market crashes, then think about it. If suddenly there's a flood of people buying up cheap real estate, that would prevent real estate from getting any cheaper. Now, I'm going to hold off on that. I don't want to go too deep in that rabbit hole in this video, but 401ks, Roth IRAs, stuffed with tax-advantaged assets ready to be liquidated are where a lot of people are planning to come up with the seed capital needed to purchase real estate. People are absolutely willing to sell loads of stocks to the stock market or in the stock market in order to free up capital investments needed to pick up real estate on the cheap. But you got to remember, the price has to be right. And what's holding a lot of people's purchase plans back for now are the prices of houses, not so much the interest rates at this point if they're paying cash. And so, it's not that they can't afford to pay for them, but it's that a lot of these cash buyers, a lot of these cash real estate buyers in this housing market, they're refusing to pay too much for something, and they're refusing to pay for these types of assets. They're planning to essentially watch and wait for some of the current economic chaos to subside before resuming the housing search. Also, if you're paying cash for real estate, you want a discount, right? And this is what these smart, relatively, I won't even say affluent, but these smart prepared buyers are expecting. And also prices may be lower after that, or they may not want to, at least maybe they want to wait for a better chance of buying something that's priced a little bit more rationally, a little bit more fairly. This is basically another word for what they're looking for a deal. Now, the Fed's recent warning may very well have just made it even easier for low income and for middle class families to get rich, believe it or not. Creating simple, lazy side hustles that make an extra $100 to $200 a week on the side will absolutely be the key to families being able to survive in this new world economy. Now, for more information on what me and my family are doing to create additional streams of income and to learn how we plan and continue to make our money work for us, feel free to reach out to me in the comments down below. My contact information is also in the description of this video. Now, two Federal Reserve officials said Monday that they are very likely going to be continuing to raise the Fed's key interest rates to roughly 5% or more, and they're basically going to keep it at its peak throughout next year. Longer than many people on Wall Street, many investors on Wall Street had expected. John Williams, who just so happens to be the president of the Federal Reserve's Bank of New York, who is among a core group of officials around Fed Chair Jerome Powell, said in a speech to the Economic Club of New York that the central bank has more work to do. And if you know anything about the central bank, if you know anything about the Fed, more work to do means that they're going to be tampering with the monetary system. They're going to be tampering with monetary policy to reduce inflation closer to its 2% target. Now, this is not a good sign for families in the current housing market, for families in need of a home to rent, and families, not for the labor market. Certainly not families who are dependent on the labor market, or families who are concerned about their jobs in this current labor market, as we're very likely to see another wave of layoffs headed our way as a result of the Fed's next decision. And as more families are finding it more and more difficult to qualify for homes, more and more home buyers are remaining renters. Now, we're seeing the increased demand for buying real estate translate to a smaller inventory of homes available for Section 8 renters. That's right, guys. If there are more renters hitting the market, that means that the inventory available for Section 8 renters will also be reduced. And, as more and more families downsize, the higher income households begin to encroach into the space of the lower income household and lower income rental market that Section 8 renters or applicants might be in the market for. James Bullard, president of the St. Louis Fed, suggested that financial markets are underestimating the likelihood that the Fed will be or will have to be more aggressive in its fight against the worst inflation that we've seen in 4 decades. This is concerning, to say the least. This particular insider intel signals a major warning sign of what is coming down the pipeline. Now, the Fed has raised its benchmark short-term interest rate 6 times this year to a range of anywhere between 3.75% to 4%, which each of the last 4 interest rate hikes from the Fed being a historically 3 quarters of a percentage point each time. This is the largest back-to-back Fed interest rate hike that we've seen I don't think we've ever seen this before now that I think about this. Even going back, 100 years, I don't remember seeing this. Certainly I wasn't there 100 years ago, but just thinking, history wise, I don't remember seeing this in previous charts. Now, the central bank, they're expected to raise interest rates by an additional 0.5 point when it meets in mid-December. Now, this would actually be a good sign because this would mean that the Fed may actually be slowing down and potentially pivoting, maybe even getting to a point of pausing, hopefully one day reversing course. Of course, that remains to be seen. But this would potentially represent a reduction in the size of the Fed's rate hikes. Now, Fed officials have essentially stressed that, they expect to keep their rate hike. They expect to continue to keep the key rate at a historically high level well into the future. This is what they're saying, folks. And the central bank, he added, will likely have to keep its benchmark rate above 5% all throughout 2023 and into 2024. So, he also reiterated that, his view from the Fed should be prepared to raise the rate to the lower end of a range between 5% and 7%. And this comes from an insider, a little bit of insider information about what the Fed is planning on doing by the end of next year, with inflation falling to 3 to 3.5% by then. These are projections. So what actually happens may be different, but these are the best guesses that we have. And this is coming from some insider intel, people who are close to the Fed, people who are close to Jerome Powell releasing this information. So the question is, who stands to make a quick buck and increase their net worth, or possibly even get rich off of all this, right? Well, American Homes for Rent is a REIT, also known as a real estate investment trust, that invests in single family homes and they rent them out. So yeah, families just like mine and like your family, we can rent normal homes from companies like American Homes for Rent. So the company owns about 59,000 properties across almost half of the United States. And historically, the single family rentals market was, is highly fragmented and it's dominated by landlords with a small number of properties. But American Homes for Rent is a little bit different. They're one of the first REITs to successfully scale single family rentals. Funny thing is I was talking to a lot of different home developers, home builders over the years. I'm like, why do you sell your properties? Why not build and sell maybe even, 70% of them, but hold on and rent the remainder? That way passive income could be generated, equity in the properties could be built up. It almost seemed like a no-brainer to me. But anyway, so back to the topic at hand. So Homes for Rent was one of the first REITs to successfully scale single family rentals. And this particular company has exposure to some appreciation during the pandemic rally. And when I say some, I really mean a lot. It's been a lot of appreciation. In the neighborhood of 30% of these properties have seen appreciation over the last 18 to 36 months. This particular company is literally leveraging and investing in properties from Phoenix to Atlanta, Charlotte, Dallas, as well as Nashville, just to name a few. Now, I'm not sure of the rental applicant criteria. I'm not sure if they accept Section 8 rentals or Section 8 applications, but that would be good for investors to know. A lot of investors over the years have preferred Section 8 renters, as it's almost like guaranteed income, since the government is paying all like 100% or a portion of the rent that would be due. So anyway, the reason for the lag in the increase in rental rates, a lot of American Homes for Rent, their rents are under the market rate. Now, keep this in mind. The reason for this lag is not because landlords are nice, and it's not because rents get it's not because they want to give their renters a discount. They're just not being that nice. It's mainly because rents get reset annually at the earliest, right? So even if home prices were to increase by, let's just say, 20%, landlords are a little bit more hesitant to set rents on renewals that high. They don't want to lose the tenants. So, normally landlords will wait until the tenant moves out of the property before adjusting the property's rent in order to match the market. And so this means that most of American Homes for Rent properties are at sub-market rents. Basically, they're undercharging for their rent. Now, even if real estate prices stagnate or they fall just a little bit, American Homes for Rent's properties, they still have a lot of catching up to do. So even if rents were to pull back, a lot of American Homes for Rent's real estate properties probably will not have to reduce their rents. They could more than likely even increase the rents, although most of the market would have to reduce the rents. I hope I'm not confusing you guys, but bear with me on this, right? So American Homes for Rent, they're not the only REIT that is positioned to make a lot of profits over the next several years. You've got Camden Property Trust. You've got Mid-America Apartment Communities Incorporated. You've got UMH Properties, just to name a few. Now, one way to get in on some of these investment opportunities would be to dollar cost average into some of these real estate investments. You've got platforms that leverage fractional share purchases like M1 Finance, Schwab, Charles Schwab. You've got Fidelity Investments. You got Interactive Brokers. You've got Robinhood, TD Ameritrade. You've got E-Trade. You've got Merrill Lynch, Vanguard, and a whole lot more of them, right? These are even the low income earners in our economy. Even if you're a low income earner, they can actually get their foot in the door by putting their money to work for them. Now, believe me, this is not the only way to create passive income. In fact, there are literally thousands of ways to create passive income and, additional streams of income, additional streams of side hustle income. But this will be the key to survival. Now, I think it was Warren Buffett who said it. If you don't find a way to make money while you sleep, you will work until you die. And that quote really resonated with me. Now, for more information on what my family and I are doing to create additional streams of income and to learn how we make our money work for us, feel free to hit me up in the comments section down below. Also, my contact information is in the description of this video. I wish you guys the best. Be safe.